Please subscribe, like, and hit that notification bell. Thanks, guys.
Okay, guys, it's Kevin Wadsworth, Patrick Karim, and NorthStarBadCharts.com, of course. Patrick gave me a shout yesterday and said, we've got to talk about something that I've just seen on Twitter. I think it was something to do with a tweet that Tavi Costa put out, Pat. So what was it all about?
Yeah, well, this is really a critical chart that Tavi put out. But like we always do, we can't just put out a chart and put out a narrative, right? We got to look at the chart. We got to do some ratios. We got to see exactly how is this information going to help us make better decisions, right? It's like we do all the time there for our members at North Star Bad Chart. So if you
it's all about the evidence, Pat. It's all about the evidence. So I think the chart was something to do with oil and strategic oil reserves. There we go. There's the chart for petroleum reserves, and seems to have fallen off a bit of a cliff there and is plunging down towards the zero line. So what's going on there?
Well, before I head into the charts I'm working on, guys, which are going to give us great insight into what's happening in this oil sector, inflation, narrative, etc. Look, whenever you have a chart like that and you put a little yellow arrow there going down, it's like you're playing with people's imagination, right? Which is kind of good. You're grasping at emotions. Oh, where's this going? Is it going down the basement? But you know how we are. Like, I want to see more data. I want to see data. How low was it low before? How does this look like with other major instruments? So look, let's just read what Tavi said. He says, with the recent surge in oil demand, the U.S. government is now left with a petroleum reserve sufficient for only 16 days. There isn't much pressure remaining from their end. In fact, this policy is gradually being reversed. The government recently announced the purchase of 6 million barrels, but later had to retract that decision, citing market conditions. So what does that mean? They're not buying? It's worth noting
that they're buying more.
What?
Or they're buying more, maybe? I don't know. Perhaps
he said that they're buying more. And Tavi, if you watch that, put a comment, please. They said they're buying more, but then they said they're not buying more. It's worth noting that the recent oil rally began concurrently with the weekly change in petroleum reserve shifting from deeply negative to zero. And that's also another thing. This is like, was it really that event that caused the rally to go up? Because as we know, you cannot know exactly that single event, right? There's macro tidal waves, which include a plethora of events from a plethora of analysts out there, and they're all placing their bets. That's carving out the price chart. So to think that it's just a strategic petroleum reserve that they do in action that changes the price chart is a dangerous narrative. Follow the price. And if there's a nice narrative attached to it, fine. But you should always look at the price chart first. So I know this.
Tavi's right to draw attention to the chart itself, because very clearly, I mean, all the way back to 1990, you can see we're setting a bit of a historic precedent here, because the Strategic Oil Reserve has not been as low as it is now throughout that period. So for several decades, we're setting new records in terms of how low this is getting. So, from a fundamental point of view, you'd have to think something's going on there. But as you said, how does this chart drive the oil price? So in other words, is there a correlation between this and oil price? If we're going to take the view that this can really only resolve in one direction eventually, and it's going to have to be to the upside.
That's right.
Is that going to make much of a difference?
Yes, and this could be. It doesn't mean that. Yeah, we want to find out that how this can help us. I know that Tavi did the Strategic Petroleum Reserve divided by implied oil demand daily. But other than that, I found two sources here. This one is from the US Energy Information Administration, and this is the SPR. So I think this is their Strategic Crude Oil Reserve. I don't know why they call it SPR, in thousands of barrels from the 1977. So you see it goes up, sideways. In the 2000s, that actually went up, sideways, and then down. So it's not quite
Strategic Petroleum Reserve. I would have...
SPR, yes, strategic. Yeah, of course. How come? What? It's so easy. How come it's like my dyslexia, Kevin. I couldn't figure that one out for some reason.
It's okay.
And then after that, I have my other source here. It's on the NASDAQ, QuantDL. I have another data source for that. and that's a Strategic Petroleum Reserve monthly. And the numbers are not quite the same because look, you'll see here, you have numbers in the future, Kevin. I didn't quite understand that. This is August 31st, September 30th, and have values for that. So I didn't quite understand how that was possible.
For an actual petroleum reserve.
Yeah, look, it's the future. But in all cases,
well, I suppose I'm guessing that's probably factoring in, and no doubt people are going to comment and tell me I'm completely wrong here, but there'll have been a commitment to purchase going forwards, and perhaps the demand going forwards is known up to a point. So I don't know, maybe it's an element of forecasting in there. Well, it has to be an element of forecasting, doesn't it, if it's going to the future?
Well, in all cases, guys, look, you guys have been waiting a long time there. I'll show you the charts I've been working on. So here I did a copy paste of, this is the one from the EIA.gov. So here's a petroleum reserve. I tried to stretch it, align it with the dates on the my time scale here, because I'll show you, I'll overlay the oil price chart right now. Price goes up here in the 80s with this, look at that visual order sent to back. Every time I overlay, you see the highlight? Why does it do that? Okay, well, it goes up, guys. You can see in this 80s, goes up a little bit with the Strategic Petroleum Reserve, SPR, then goes sideways through mid-90s, mid-80s, 90s, all the way to 2000. But look at the oil price. The oil price broke out in late 90s, while the Strategic Petroleum Reserve was flat. And then they had a dip, right? The 2001 crash, the SPR went just a little bit down in 2000, 2001. And after that, oil price just rocketed upwards alongside the SPR, which also started climbing upwards. And then SPR started flatlining, oil prices flatlined, then SPR went down. The oil price actually went down before the SPR went down. And now the SPR is pretty low, but oil prices are not catering, guys. They're not cratering, cratering. Which brings me to my second chart right here. I'm going to bring you. I'll bring you here. I got the QuantDL values right here. So the orange line, it tracks better. So the orange line is the one from the NASDAQ here, the strategic SPR monthly. Not that chart, this one here. And this one, you see how the SPR, sorry, I can't overlay my mouse because that graphic, well, you know what? I'm just going to scoot that aside. Let me see that. Here's the SPR tracking pretty accurately the actual oil price right here, at least for this spike here, sideways, down, dip, and both rocket up together, rocket up, all the way here to the peak. And then the SPR flatlines. Oil price drops way ahead of the SPR. Drop. And this is probably closer to the TAVI chart. Look at that. Look at this, Kevin. We're lower than we were in December of 00 when the stock markets there. I think they already started to implode, right? By that time.
So the suggestion is that this is setting us up for a repeat type move.
Well, I see that as a fuel tank, like no pun intended. Right now, if you've sold everything, what's the only thing you could do? You could decide not to buy, but once you've sold everything, the only thing you can do is either not do anything or, like you said, buy, right? So from a contrarian aspect, you're definitely not overbought, right? We're here, we're these levels where you're definitely not overbought. So I don't know how much SPR, how much more it could go down, but it looks like it's pretty, that reservoir is pretty empty.
How much more it can go down is limited, but I suppose one question is how long it can stay down at that level. There have been periods in the past where it's flatlined at quite a low level, although not as low as this. So from my sort of scientific head on here and looking at correlations with the past, one thing that jumps out at you is that we are at a historic low point here, that we, as you say, it does appear to be, to use your analogy, fuel in the tank to apply upwards pressure when the strategic oil reserve begins to increase again.
That's right. And you know what tool we always use, right? we use a ratio, because now by using a ratio of those two, I'll see exactly how that's going to influence the price of either one. Because while we see,
and that's how to do it scientifically and, you know, with proper methodology, because trying to figure out correlations and relationships between two charts is one thing to do it by eye, but if you actually do a ratio chart, then it actually, you know, does it properly and scientifically.
That's right. By eye, I see it often, but it's people could play with the scales, they could fit. That's fine to have a bird's eye view of seeing where they go. But if you want unequivocal, unbiased, scientific, you have to divide it mathematically, one versus the other. Then you'll know the truth. Exactly. There's no, you can't play with that, right? So I prepared it for you guys. And look at this chart. Okay. This is the ratio, Kevin. So this is oil divided by the strategic reserve.
So that's the blue line. So if it's going upwards, oil price is outperforming the increase in the strategic oil reserve.
That's right.
So it looks to be very much a mirror image of the oil price itself, doesn't it?
Exactly. The fact that oil has refused to break down alongside the strategic oil reserve is very positive for the oil sector, right? It's not underperforming it. Whenever oil has underperformed the strategic oil reserve, and often they'll both go down together, but one will go down faster than the other. So when oil's going down faster than the strategic oil reserve, that ratio chart is going to be going down, right? Which is a bearish environment for oil. But when both are going up and one's outperforming the other, then that's very bullish for oil. So right now we have half of the equation. We have both those ratios going up, but we're just missing that denominator. We just need the strategic oil reserve, the orange line. We just want it to turn up to really add weighted evidence. But by that time, you see, look here, you had the embryonic wake up here in the early 2000s, Kevin, and looking at that, it kind of looks like today strategic oil reserves dumping, late 2000s, late 90s, to early 2000s. Look at that. Oil's going up while the strategic reserves are dumping. So oil's going up while the strategic reserves are dumping, and oil's already started moving before the strategic oil reserves. So we could probably have, in maybe 1 year or 12 months, this thing could actually start moving up after oil proves that it really wants to go up, right? Because it still has a little work to do. Not quite out of the woods yet, oil. But if ever it's able to really move up, then we'll have a lot of fuel left as the SPR gets filled up again. And as long as that ratio keeps going up, as long as if SPR is going up and oil is outperforming SPR, that automatically tells you that oil is going up also, and even faster, right?
And looking at the scales on that chart, it looks as though the oil price is highly likely to break out to new all-time highs, doesn't it?
Yes. See here how it flatlined? It's bonkers. Like oil is going a little low. That thing flatlines here. So there's a lot of clues. So oil is primarily driving this, but when you're going to see both moving up together at the same time, that's going to be bonkers. So the takeaway, guys, from all of this is the fuel tank is not full, right? If the SPR be full, there's nowhere else. What could they do? They can't buy more, right? I don't know how many reservoirs they have, so they could either go neutral or sell. And that's when the SPR is full. That's when oil top previously. Now we're the complete opposite, Kevin. Complete opposite.
Yeah, when that buying comes in to top up that strategic oil reserve, it's going to be kick-starting an up move in the oil price that is actually starting from a higher base than we've seen before. So given that, given how low we are now, it's entirely reasonable to expect oil prices north of $150 a barrel.
Yes.
Just looking at those scales, I mean, there are scientific ways of calculating targets, but just eyeballing that, you know, that would be a conservative estimate, wouldn't it?
But the setup's there. Seriously.
That also ties in with commodities breaking out at the moment as well. So we're seeing other commodity sectors, you know, making moves, commodity indices, Bloomberg Commodity Index, and that kind of thing. So it kind of ties in with the overall technical evidence story that inflation is not transitory at all. It's something we're going to have to learn to live with.
Well, yeah, it's there, guys. It's there. The yields the yields keep climbing up. So whatever is happening, the 10-year, 30-year yield, this oil chart, the SPR, like, guys, just forget the news, forget the crazy narratives that you can't action on. You just like fall into a fear scenario in your head. What forget all that. Do like we do, like what we do for our members. We do the charts, objective. If ever that chart breaks down for oil, then look, the premise was wrong. It needed more time to hibernate. It wasn't quite ready yet. But right now, uptrend, consolidation, above important early breakout lines. And as soon as that thing continues upwards, you have the macro environment for this oil play to keep going up. You have the setup's it's there, guys. So
the setup is there for a continued or a renewed surge in inflationary pressures from oil, energy, commodities, uranium, precious metals as well. It's a setup very similar to the 1970s, with one or two very important differences in terms of debt to GDP and overall debt and debt repayment metrics, which are, what's the word, problematic to say the least. It's going to be fascinating to see how that is resolved or isn't resolved over the next few years. But a lot of what's going on is very reminiscent of the 1970s, I have to say, particularly with regard to bond yields, inflation, and commodities.
But Kevin, I hope the bell bottoms don't come back, right? Because I don't think I'll be able to wear bell bottoms.
Did they ever go out, Pat?
Oh my goodness. All right, guys. So try to keep it short. Remember, we have currently a 50% discount there for anybody use the promo code Kinesis. We have the ratio tracker where you could use our ratio tracking tool to be able to swap your gold for silver to increase your stack. We have a whole bunch of other stuff for you guys. So go check us out, northstarbatcharts.com. Bye, guys. Thanks, Kevin.
Cheers, everybody. Bye for now.
Please subscribe, like, and hit that notification bell. Thanks, guys.